video, I'm going to teach you how to stop overcomplicating trading. And this came from someone who spent years learning how to trade. It took me years longer than it needed to be. And to be honest, I could have done it in 1 year with the right education. I wasted years learning pointless stuff. In this video, I'm going to teach you exactly what you need to do. And if you stick to the end, this might be the last video you actually need to watch on trade. Okay, so the first thing you need bias, right? Why do we need bias? We need to know where the market's actually going. And lots of people will say you don't need to predict price. That's completely wrong. You need to know where the market's likely to go. Right, now no one knows for sure where the market's going to go, but we know on the higher time frames, which is the daily and the 4-hour chart, that price is going to go for liquidity. Now, what is liquidity? Liquidity is highs and lows, right? And hopefully we're on the daily chart on yen. It's pretty obvious. You know, we're bullish on yen and we're going to go for this high here, this key liquidity pool here, because we know at highs there's lots of liquidity, and price will move towards these highs like a magnet, right? It'll get pulled towards it, and you can see here price just keeps going up and up and up towards this high. So we know there's lots of liquidity here. And for those of you who know, there's an order block here too. So let's mark out this order block. There's an order block here, but price completely disrespects it. You see this big candle? See how we close right through it? So there's no respect of any bearish order blocks. And you've got a key high that price wants to go to. That tells us we're bullish. Now, what does that mean? That means when we go in the lower time frames, we're only looking for longs. We're only going to look for longs, and we're going to avoid any low probability shorts. So let's go onto the 5-minute and we can see what we can see. Okay, I'm on the 5-minute chart, and here's that key high that price is going to, right? So we know we're bullish. We've done the hard work on the higher time frames. We know the direction, and we're only going to look for longs, right? This is so important. We're only going to look for longs, and we're not going to sell any bearish fair value gap here, because lots of traders, they'll be shorting inside this fair value gap, right? They'll see price coming up, and they'll think, because all they've watched online is a fair value gap video, that price will bounce off it and go down. That's completely wrong. And the reason that's wrong is because you need to know where price actually wants to move on the higher time, right? And we did the work on the daily and we know we're bullish. So what that means is we're only looking for longs. Now, when you're a day trader and when you're a scalper, you want to see a liquidity sweep, right? You always want to see a liquidity sweep. Now, why do you want to see that? On the lower time frames, especially for Forex, but you get this in indices too, is there's lots of manipulation. Now, when people say manipulation, what that really means is, like we know, we're bullish, right? Is that price will often come down just to go up, right? And it will come down and it will take people's stop losses orders, and then it will go up, right? And this probably happens to you a lot. You probably know where price is going to go. You probably get into your entry, price comes, takes out your stop loss, and it instantly goes to your take profit, right? That's what I mean by manipulation. And to avoid that, what you want to do is you want to wait for some sort of liquidity sweep. Now, a liquidity sweep is essentially when we're bullish, if you want to see some sort of low taken out, right? And if you look here, we've got like Asia's low around here, right? Asia's low, because this is New York, 7 a.m. But at 7 a.m, we've already took out London's low. So we're not really interested in London's low. But what we see is lots of liquidity here, lots of liquidity here. So we know, right? We know that lots of people have their stop loss orders around there, right? We know lots of people have their stop loss orders here. And then price comes down on news and it wicks out, right? You see how we wick out this low? We have a few little small candles and then we quickly shoot off, right? So price is taking out liquidity, right? It's taking out liquidity and it quickly shoots off. That is right there is a liquidity sweep. Let's mark this out. Liquidity sweep. And you always want to see this before you enter a trade. So we've had our liquidity sweep, right? Lots of orders, lots of stop loss orders here. Price has come down. It's taken out those stop loss orders. At this point, right, because we're bullish and we've had the liquidity sweep, we're only going to look for a bullish fair value gap. We're not going to look for any bearish fair value gap. We're looking for a bullish fair value gap. And we're targeting this daily high, which is also around London's high. That's what we're looking for. And if you look at price action here, we get this big bullish fair value gap here. That bullish fair value gap, right after the liquidity sweep, that is smart money literally screaming at you that there's a reversal. And for those who keep asking me how to predict a reversal in New York, this is exactly how you do it. You wait for a key liquidity to be taken out opposite the daily bias, and then you wait for a fair value gap to be formed in the daily bias direction. So we've got our bullish fair value gap, right? We know we're bullish on the higher time frames. We've had a low taken out, which is our liquidity sweep, and we've got the bullish fair value gap. What we're going to do is we're going to enter right on that fair value gap, right? We're not going to mess around with trying to finesse the entry because at this point, right, it's such a high probability trade to get into, right? It's such a high probability trade to get into because this is aimed for a 2-to-1, right? Just targeting that high, you'll get high probability 2-to-1. And the reason why it's so high probability is because we've already had the liquidity sweep. We've already had the liquidity sweep. So it's very unlikely if we're bullish, and we know we're bullish because we've done the work on the daily chart. It's very unlikely that price will sweep out this low here like it's done, and then come out, sweep out the low again, and then go straight to your take profit. Right? It's very unlikely that price will do that. But it's really likely that if we're bullish, that price will come, take out a low, and then go straight to your take profit. And usually you're probably, buying like this fair value gap here, or, this fair value gap here. Price comes, takes you out, and then goes straight to your take profit, and then you get angry. The way you avoid that is by waiting for liquidity sweep. I always wait for a liquidity sweep. And for entry, it really does not matter. And that's not what people tell you often, right? People often say, entry is the most important thing. You need, this mitigation block, breaker block, inversion fair value gap. You don't need any of that. As long as you've got the bias, a fair value gap can make you money, right? An order block can, an optimal trade entry can. The entry pattern is the least important thing. And what I mean by that is, as long as you've got the bias, right, the direction of the market, and as long as you've got a liquidity sweep, you're 90% done. You're literally 90% of the way there, right? Any entry will do. Like, if you look carefully, there's an order block here, right? So you could have entered on this order block, right? So this instead could have been your entry at this order block. Stop at the low, like a 2-to-1. Right? It doesn't really matter at all. And it's probably like, some sort of mitigation block, whatever entry. Some people, and I wouldn't recommend doing this at all, especially if you're an unprofitable trader, is they do something called a total sweep, which is they will literally buy this low as price smashes through. So they will always have like a fixed stop loss, right? And they'll just aim for like a 1-to-1, a really high probability 1-to-1, or even a 2-to-1, right? But they'll just have a wide stop loss, and they'll just buy as price comes down into these lows, because instead of waiting for a liquidity sweep and then a fair value gap to form, they'll just wait for a liquidity sweep and they'll buy the liquidity sweep. But yeah, that's very advanced. And I'm going to give you another example, but this time it's going to be on GBPUSD. Okay, so we're on GBPUSD, and as always, we're on the daily chart. And I want you to very quickly think, is price action here, is it bearish or is it bullish, right? Is it more likely to go for a low or is it more likely to go for a high? I hope it's really obvious we're going for this low here. We're going for this low here. And in case you're ever unsure about daily bias, and this is so important, so make sure you write this down, is you want to look at order blocks, right? So let's say you weren't sure if price was actually bearish. What you would do is you look at this supposed bullish order block. So the last down close candle before the up move is your order block. And if price was, let's say, bullish, right? If you weren't sure if we're actually bearish. If price was bullish, it would tap the order block and then shoot off. Right, that's what price would actually do. But because we've actually closed into the order block, and we've shown no respect to it whatsoever, that adds to the probability that we're bearish. And combined to that, we've got a low that's so obvious, that's right there. That makes us bearish. So what does that mean for us? It means we're only going to look for shorts. We're going to get on the lower time frames and only look for shorts. We're not going to get, we're not going to long any of these low probability candles here, right? These little doji candles. So this is where most of your losing trades are. Where people say to avoid low probability sells, what they're talking about is these little doji candles here, right? If you're buying in a downtrend, automatically you're low probability. I see people on X doing this where they think, for whatever reason, they think GBPUSD is bullish and they keep buying it. They keep buying it, and all these little doji candles, they keep getting stopped out. But we're not going to do that, right? Because you've used a higher time frame, you know where price wants to go, you've got your direction, you're in the lower time frames, and you're only looking for shorts. We're only going to look for shorts. Okay, so we're on the 5-minute chart for GBPUSD, and remember, we're bearish, and here's the daily low. Here's the key daily low, and remember, you won't see this in price action, but what we're going to look for first, as always, is a liquidity sweep, right? We're not just going to, sell any sort of fair value gap here, right? Because a lot of traders here, they would have sold this fair value gap here, targeting the low here, with their stop loss, and then price comes, takes them out, and eventually hits their take profit. Very annoying. That used to be me for years, which is why it took me so long. I want to save you the hassle. So what we're going to do is we're going to wait for some sort of high to be taken out. And you can say this high here is good enough, but for me, this is like a key high, right? There's lots of liquidity here. Lots of people are trailing their stop losses, right? Because you remember when you were a retail trader, like support and resistance, you would short here, and then you'd put your stop loss there, and there, right? People would trail it down. So what we're going to do is we're going to wait for the liquidity sweep. So you've got the liquidity sweep here, right? Liquidity sweep. Let me mark this out for you. Liquidity sweep. You always want to wait. So you got your liquidity sweep, right? So this is your high probability trade. So you got your liquidity sweep here. At this point here, so this is early London, is we're waiting for some sort of fair value gap. And here, right here is your big bearish fair value gap. Big bearish fair value gap. That's smart money in London telling you there's a reverse. Right? Like that. So you've marked out your fair value gap, right? At this point here, you're going to enter in your fair value gap. Now, you might be thinking, it's not the best trade, is it, right? It's not the best trade because it doesn't quickly move off, right? Okay. This is what trading actually is like. And the second reason why that is because price in London, and this is so important, it doesn't really move to about 3 a.m. Eastern, because the first hour of London tends to be a bit of a choppy, fake move. So the first hour of London, it's a bit of it, like I would avoid it personally. But 3 a.m., we're in the fair value gap still. You can short, and then you just ride price down all the way to the low. So you almost get a 4-to-1 there. Super high probability trade. Your stop loss is at the high, which is a liquidity sweep. So it's very, very unlikely price can do that, right? Not impossible, so that's why you always have the stop loss, but it is very unlikely that can happen. And right there is such an easy, high probability setup. High probability setup. Like you can get this if you really wanted to. Let's say you always aim for a 2-to-1, you can get this about 60% win rate. Right? If you've got a 60% win rate and a 2 risk to reward ratio, you can make a lot of money. A lot of money. Ignore any sort of guru telling you otherwise. And yeah, that's as simple as I can make trading. And I'm telling you, if you watch this video again and you actually understand it, this is all you need. Daily bias is just targeting highs and lows on the highest time. So daily, you can do the same analysis on the 4-hour chart, and if you're struggling for targets. At that point, you go on the lower time frame and you only look for the daily bias direction. And you always wait for liquidity sweep. Wait for a liquidity sweep, wait for the fair value gap to form in your direction, and then you take that fair value gap. And more often than not, you'll win. And you'll be a profitable trader. That's it. But yeah, if you liked the video, please like, subscribe, leave a comment for the algorithm, and I'll see you guys in the next video. Peace.